And with the job market firming, many economists think the Federal Reserve is on track to raise interest rates at its next meeting in December. Today, a number of Fed officials didn't focus quite so much on December, but on what might happen after that. Kate Rogers has more.
Fed officials are now starting to look at life beyond liftoff. While Fed Chair Janet Yellen today did not make mention of U.S. economic conditions or the Fed's rate hike timing, plenty of others are chiming in. New York Fed President Bill Dudley told a crowd at the Economic Club of New York that tightening should be done slowly, adding that the Fed will maintain accommodative policies even after rates are raised.
I think it's quite possible that the conditions that the committee has established to begin to normalize monetary policy could soon be satisfied. In particular, I'll be evaluating the incoming information to see if it confirms my expectation that growth will be sufficient to further tighten the U.S. labor market. After liftoff commences, I expect the pace of tightening will be quite gradual.
Chicago Fed President Charles Evans agrees with the notion, repeating comments he made on Friday to CNBC's Steve Leisman.
We need to think about the entire path because that's what's going to dictate how accommodative or restrictive our policy is. And so I think we need to have communications which indicate that the path is going to be gradual.
Both Evans and Dudley expressed caution due to concerns over inflation running below the Fed's 2% target. But St. Louis Fed President Jim Bullard says that both the Fed's inflation and employment goals have already been reached.
The policy rate remains near zero, and the Fed's balance sheet is more than $3.5 trillion larger than it was before the crisis. Prudence alone suggests that since the goals of policy have been met, we should be edging the policy rate and the balance sheet back to more normal settings.
Also at the Cato Institute was Richmond Fed President Jeffrey Lacker, who's dissented at the past two meetings.
Lacker argues the Fed should have already raised rates. He said earlier this week he could support a more rapid rate hike path. So while the Fed looks toward its policy path in 2016, Wall Street waits for the action. For Nightly Business Report, I'm Kate Rogers.